Here's a thought experiment. What if I took all the last 20 years of real estate data here in Central Florida, I uploaded into AI, into Chat GPT, and I asked it, where's the market headed next?
Skynet begins to learn at a geometric rate. It becomes self-aware at 2:14 a.m. Eastern Time, August 29th.
Interesting. Let me put August 29th in my calendar. Definitely not coming into work that day. But until then, we are going to use a large language model like Chat GPT and take a look at the real estate market. You see articles like this is a recent one from Redfin talking about home prices are falling in 11 of the 50 most populous U.S. metros, the most in 19 months. And when you go online and look at things, again, you're starting to see some market correction data. And anytime you get turbulent economic, we're going through the tariff, through Liberation Day, all these things, you start wondering what's going to happen. Now, this thought experiment came about. A friend of mine who's a professional poker player, almost a professional poker player, said something really interesting to me. He said, the reason you see the same people win these pros tournaments year after year after year, they win all these big events, is because even though poker is a lot of luck, you can't control what cards you get, they understand the percentages of every single hand and they play those percentages. And that's important because they take emotion out of it. And when we're looking at investing, we can't predict a black swan event, but we want to take the emotion out of things like buying stocks and buying real estate. So I thought it'd be a cool thought experiment to take the 20 years worth of real estate data here in Central Florida, some of the predictions, upload it all into ChatGPT and find out what it says. I thought it was really interesting, so let's go ahead and get into it. All right, so I took the Orlando area market 20-year history. You can get this on the internet. I had ChatGPT take it and I uploaded it into ChatGPT, and then I cut and paste. I created some questions that I could cut and paste in here so you wouldn't have to watch me type all this. So it's basically picking up that it has that data. So first thing I said is, if I upload this 20-year data, can you help me analyze the real estate market over the last 20 years? And ChatGPT, let's see, it kindly says, yes, tell me what specific questions that you've got. Then I just wanted to ask, based on the data, if it could see this. So I said, based on the fact that we had the biggest real estate crash in prices in the last 20 in 2008, are you aware of that? And ChatGPT says, yeah, looking at your 20-year data, the crash peaked in 2006 with prices topping around 250,000. By late 2008, early 2009, prices collapsed 40 to 45%. Median price bottomed to 130 to 140,000. Look at that drop. That is just insane. So July 2006, median 254.9. March of 2009, 135,000. That's roughly a 47% peak to trough. That is what you call a market crash. Then I asked that, based on a predictive model using the info from the past, where would inventory, or what would inventory need to be and sales volume to get another major drop in real estate? Because it also talks here about how much the volume of transactions drop. And so ChatGPT said, so here's a short and direct answer. From 2006, 2008, inventory peaked at about 24,000 homes. Sales volume crashed to 8 to 1,200 closings per month, and we got to 20 to 30 plus months of inventory. So I'm going to scroll down here. So predictive model, inventory would likely need to double. So from today's level to go to around 20 to 24,000 homes, monthly sales would need to fall another 40 to 50% from current to about 900 to 1,100 closings, which would push inventory to 18 to 24 plus months, which this would be considered the danger zone. So if you see inventory over 20,000 and sales dropping below 1,200 a month, that would likely create a major price correction similar to 2008. Right now, we're nowhere near that. Inventory is about half of what it was in the crash, and sales are weak, but have not yet collapsed. We are about 12,400 homes in inventory. It is saying we would need to double. And I've been saying, over the years, the last few years, that we were going to get a crash in the number of transactions. And we certainly did. We went down more than 30% for transactions. And that actually happened. And that changed the market as far as making it more and more of a buyer's market. But it stayed fairly balanced. And that's because of the lock-in effect, unlike 2008, where everybody had no equity and really high rates. Now everybody has a ton of equity and really low rates. And so that's why we predicted, or I should say a lot of people, myself included, that we wouldn't see any major price correction. So I want to ask Chat GPT more, but just understand what it's saying. We've got to get to over 20,000 homes to get a serious market correction. Now, on the way up to that 20,000 homes, it'll definitely be becoming a softer and softer market. So let's see what Chat GPT says about the future. Based on current rate projection and historical market data, here's the likely trajectory of the Central Florida real estate market over the next 12 to 24 months. Fannie Mae is predicting rates at 6.3 by the end of 2025, 6.2 by the end of 2026, and it goes through some of these market and sales forecasts. So, implications for Central Florida. Given the historical data from your uploaded file and current projections, inventory levels as of 2025, inventory stands at approximately 11,697 homes. Sales volume currently at about 1,837 closings, indicating a stable market and market stability are high. Now, these numbers are changing all the time, but what is not changing is the summary. While mortgage rates are expected to decline modestly over the next 2 years, they will likely remain above pre-pandemic loans. Home prices are projected to grow at a slower pace, and sales volume may see gradual increases. Given the current inventory and sales level, the Central Florida real estate market is poised for stability rather than a significant downturn. And so one more question, or actually two more questions that I decided to ask was one, the buyer that purchased a $400,000 home now, putting about 5% down based on the modest predictions for appreciation, how much equity would they have in about 5 years? And so it does its calculations using about a 3% appreciation, which is about right when you look at all the predictions. And so when it kind of goes all the way down to the bottom, we'll just go to the summary. In about 5 years, they would have built in roughly about $114,000 without counting any extra payments or upgrades. Meaning over the next 5 years, by paying your own rent, if you're looking at this as a home buyer, and a 3% appreciation, that's over $100,000 in equity that you've built. So if you're a real estate agent listening to this and you're wondering when is the best time to buy for your buyer, it's when they qualify. It's not time in the market, right? It's not timing the market, it's time in the market. Now I asked that if I were a local real estate agent in today's market, armed with the 20-year data I uploaded, exactly how would I use it to stand out and grow my business, focusing on daily and weekly sales activities. And here's what ChatGPT says. Market inside texts or DMs per day, giving kind of an idea. Data-driven social posts per day. Real conversations, voice call or in person. And then it kind of gives out a weekly set of activities that you could do and how to improve your mindset. Said differently, focus on a daily success plan and not the data. Look, it's good to know the data because people say all the time, what's going to happen in the real estate market? And if you're a doctor and someone asks you about the surgery you're about to do, I think it's good to have a doctor that understands what they're about to do. So understanding data and how these things work is the point of me doing these videos. But taking emotion out of it, taking out black swan events, what you should do every day is the same thing you should do if the market was booming. Create a set of activities, do them every day, rinse and repeat, and over time you'll be successful. What I will tell you, as the market has shifted, the top agents are making more and more money, and the agents that are not doing a daily success plan or have that market reach that agents that have been around for a while have, they're falling behind. How do you catch back up? You create a daily success plan. And then just one last thing, rates. Since this is a mortgage channel, rates started out into last week, I should say, at 6.84%. And we did have another drop. But again, this drop right between the 6.75, 7% rate range, meaning this year the market's pricing in two Fed cuts throughout the year. I think that will increase. I think we'll get rates, my opinion, below 6.5 by the end of the year. Either way, though, I'm not going to change what I do every day. So if you're a buyer listening to this, don't try to time the market. You're not going to work. You're going to be throwing away tons of money. And if you're a real estate agent and you want to know, what is a daily success plan? How do I do it? Reach out to me. I'd love to help. Hey, everyone, this is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week, and I'll talk to you soon.